Time now for the markets with Layton, and there's going to be no October crop reports due to the shutdown.
That is very correct. We will be looking back at about the last set of numbers to come out of D.C. before October 1 and the shutdown, and in that report, corn takes it on the chin. Meanwhile, traders are in the dark also about prevented planting numbers. And for beef, the question remains, will consumers pay up? Recent quarterly stocks numbers for both U.S. corn and U.S. soybeans came in higher than expected. On Tuesday, Extension Service ag economist John Michael Riley discussed what the implications of that news has been for these commodities here in early October. John Michael, let's back up to Monday, September 30th. That was kind of our last report from the government, the quarterly stocks report. What did that say about our corn situation?
It knocked corn in the chin. Quarterly stocks came in much higher than expected, even outside of the highest range of pre-report expectations. 824 million bushels of corn in elevators and on-farm storage across the United States, again much higher than what the report was expecting, but a 17% increase or 17% decrease from last year, where we were at this time last year. So, but the market trades off of those pre-report expectations, and because it was so much higher than expected, it put the market down pretty hard that day. Since then, it's come back a little bit, up about 1.3% since that report last Monday, but for the most part, it took it on the chin.
But we could safely say there's still a lot more downside in this corn market, perhaps.
Expected, yes, because of the fact that we're looking at what should be, if things continue to progress as expected, a bumper crop, one for the record books, and so that's continued to put pressure on the market, you know, for the most of the summer, and it looks like with this higher inventory number, that's continuing to be the case.
Now let's turn to soybeans. I know initially when that stocks report came out, they kind of tumbled soybean prices. Where are we now in that market?
Well, again, they've come back about 2% from that low water mark following the report. Took a little bit on the chin here recently, just because of the lack of price reporting, a number of different issues at play there. But for the most part, they've rebounded mildly, but right, they kind of followed in corn's footsteps with a number that came in much higher than expected.
All right, well, we are in a situation now with kind of no more government reports till further notice. What is that going to mean for not just corn and soybeans, but all the commodities?
That's right. We're looking at a WASDE and crop production report that's not going to be released on Friday as expected because of the fact that the government is shut down. It has sweeping issues across all of our ag commodities because we do rely so heavily on that reporting system, the mandatory price reporting for cattle, grain market news, and coming in through the ag marketing service. So much of our prices are based on what we get from those reports. Our futures markets, a lot of times that information comes from those reports. So we're looking at a decrease in transparency of price information. That's going to lead to some issues with price discovery. You know, what is the futures market supposed to be trading at? Cash markets are still taking place, but we don't really know it's harder to get that information to know for sure.
Without the October crop report, farmers, grain traders, and others remain in the dark about the number of U.S. corn and bean acres that did not get planted last spring. That information was expected to be dealt with in this now postponed set of USDA reports. Kansas State Extension economist Dan O'Brien says those prevented planting numbers, whenever they finally do come out from the government, could mean a swing of 100 to 200 million bushels on soybean supplies, as well as a 200 to 300 million bushel difference on our nation's corn supply. Meanwhile, the price of December wheat futures is still pushing well over $2 above corn. Analyst John Rose says if corn continues down in price, wheat will likely follow suit.
It's turned out to be the best of the worst right now. You have the world environment is tightened up on wheat to a certain degree. There's a lot of world wheat around. Canada has a big wheat crop. Hard red winter wheat's going to be a little bit on the tighter side, but wheat now has pushed $2 over the corn, and that's probably a limiting factor. So when you look at the wheat market, it probably has upside in that 670, 680 range on Chicago wheat, and probably can anchor down to $6 if the corn market continues to push lower.
Before we look at our cattle market, let's give you a trivia quiz to be thinking about. China is the world's largest rice producer. Who is number 2? Is the answer Indonesia, Bangladesh, India, or the United States? I'll tell you the answer at the end of the markets. Cattle futures suffered some modest losses on Wednesday of this week. Also at midweek, private data sources indicated that wholesale beef prices were 62 to 78 cents lower per hundredweight. Analyst Tom Fitzenmeyer says that while we have seen the cattle market hot for the last month, there is an unanswered question as far as the future.
It's been a really nice, slow, gradually working higher market, driven primarily by numbers and low numbers. Feeder market driven by cheaper corn prices. That's kind of had two things going in its favor. I guess the question is, are we going to be able to absorb and get the consumer to pay up? Are we going to be in a situation where it's like gas, where we kind of got used to, we complain like crazy about $3, it rallies to 4, and all of a sudden 3 looks like a deal. Maybe we're going to run into that same thing. There's a certain base of the population that likes to eat beef, and we'll find out here if they're going to be willing to pay up for it. If they are, then you could see those December cattle work up into that 134, 135 range, up a couple bucks from here. If they can't, we run into big resistance. They all start running out and buying pork and chicken, then it's going to be a problem.
Before our feature story, let's check the trivia answer for the week. And the correct choice is C. India is the world's #2 rice producer after China.